All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today is August 24th, 2026. Hope you all had a wonderful weekend. And we are off to a silly start to the week. We have got this story breaking this morning, according to anonymous Treasury officials, that Secretary Bessent could be potentially willing to tap the almost $1 trillion Treasury General Account in order to support Treasury buybacks. This is a silly story, a silly headline from these silly times and these silly people. So, first of all, no, they're not going to take $1 trillion and use it to buy back US Treasuries and do outright yield curve control. Yes, this is a step in the direction of yield curve control. The debasement trade is going again this morning. We got Bitcoin is higher, gold and silver are higher on this news. Treasury yields are a little bit lower. But this is so stupid because, look, the Treasury General Account is how the government pays its bills. It's Uncle Sam's checkbook. Yes, there's nearly $1 trillion in there. That's a mix of tax receipts and money that was borrowed from the bond market. And so say he dips in there and he takes a couple of billion bucks out of it and he says, yeah, I'm going to put it right back into the bond market. Well, that money came from the bond market to begin with. So what? He's just going to put it back. That's it. Maybe he took it from the Treasury bills from the short end of the yield curve and he's going to put it back on the long end. Yeah, it's a deep war chest, but it's not like the government doesn't have other expenses. You know, the whole World War III, Social Security, Medicare, and Medicaid, those tend to have a pretty big price tag associated with them. So, you know, a lot of people are out on Twitter already screaming, $1 trillion in buybacks. No, that's not what's going to happen. This is jawboning, guys. This is Bessent and co. and these anonymous people at Treasury who are leaking this to the press are trying to jawbone interest rates lower with the threat of using the Treasury General Account in order to buy back these treasuries. Keep in mind that the announcement from last week or 2 weeks ago about the buyback, that hasn't even started yet. That doesn't go into effect until September to November timeframe. This is all just trying to talk interest rates lower. That's very important to remember. So that's the lead this morning. Now, we've also got Treasury Secretary Bessent is expected to announce the details of this latest round of sanctions on Iran today. Now, this is being described as economic D-Day. Again, silly headlines today. It's expected that this is going to be in the form of secondary sanctions. Now, this could potentially be an escalation of other trade conflicts. All right, they're kind of backing away from the military options and they're leaning into the economic stranglehold. We've still got the blockade in place. We've got decades of pre-existing sanctions already in place. Now they're threatening to go with secondary sanctions. And we don't know the details of it, but what it looks like is, say, India and China are two common destinations for Iranian oil. What it sounds like Bessent is threatening to do is to put sanctions on those Indian and Chinese banks that are facilitating the transactions for that sale of that Iranian oil. Now, if that is the case, I reckon the Indians and the Chinese are probably going to have something to say about that. And there's probably going to be some form of retaliation from them. And so this could be an escalation of the trade war from last year. You know, remember the whole Liberation Day and the tariffs thing? Yeah, all that. So these new economic sanctions could reignite that. Now, look, as this is going on, there's a couple of different stories developing around this Iranian conflict. First, let's start with what's happening on the Iranian side. The Iranian rial has fallen to over 2 million rial to the dollar. The Iranian currency, it was worthless to begin this conflict. Now it's worthlesser. I don't know, more worthless. It's not worth anything, and it's getting worse. Iran denied the revenue from the oil sales, is having a hard time paying for the things it needs to exist. And so its currency is losing money. Now, that being said, Iran shows no sign of acquiescence. So even though they are inflicting all this economic pain on Iran and they're set to increase it, there is no way of knowing if it's going to achieve the desired outcome. Now, at the same time that's going on, we've got this story over the weekend about apparently more oil is getting out of the Strait of Hormuz than most people realize. And that partially explains why oil prices aren't significantly higher than they are. The simplest answer is the oil's getting out. Now, this story over the week, we're not going to read the story directly. It came from Axios, and Axios has admittedly been a mouthpiece of the Trump administration over the last few weeks with the whole deal or no deal thing. So take this with a grain of salt. But if you look at what's going on in the price of oil, and oil's down today about $1 and change, it's obvious at least some oil is getting out of the strait past the blockades. We don't know how much. It's probably, though, in the neighborhood of about 10 million barrels a day. And then if you factor in dumps from the Strategic Petroleum Reserve and the reduction of Chinese imports, yeah, you can see how oil has made such a small move since this war started. All right, the other thing going on this morning, shocking turn of events, Nvidia is buying its own customers, or they're at least getting there through some detours. Let's start with Poolside, the AI platform. Nvidia is making a $1 billion investment in Poolside. They're also going to license Poolside's IP for several years for $6 billion. And they're hiring more than 100 employees from Poolside, who only has 115 employees. So what is NVIDIA doing? This is an acqui-hire. This is where you basically hire the whole company, license their intellectual property, which basically means you have now enveloped the entire company, and then you give $1 billion to the company in this $6 billion IP license agreement, which is basically so the investors in Poolside can cash out. They're buying the company without outright buying the company. It's easier to get past shareholders. There's no regulatory hurdles to overcome when you do the acqui-hire. This is something that is increasingly common in the AI space. So NVIDIA is buying their own customer. That is a bold business strategy. Now let's talk about the other one going on, Perplexity. NVIDIA is expected to announce an investment in Perplexity at a $30 billion valuation. No word on how big of an announcement, no word on the other investors here, but stop me if you've heard this one. NVIDIA is going to give money to Perplexity, and then Perplexity is going to give money to NVIDIA to buy their product. And that's basically the premise of this entire stock bubble, which is the largest financial fraud in human history. But hey, we've covered that ad nauseum. So NVIDIA is buying, to one extent or another, two of their customers this morning. That's fun. Also, this is interesting. NVIDIA is raising their prices. In an email to himself, Jensen Huang notified his customers that NVIDIA's chips would be going up by as much as 15%. That's being driven largely by higher memory prices. We've also got AI platform Hugging Face is putting itself up for sale. They're talking to a bank about their prospects. No announcement of a deals or any interested buyers. In other words, Hugging Face appears to be having problems, and they're trying to exit. That's interesting as well. A lot of consolidation, acqui-hiring, circular financing going on in the AI space this morning, especially around some of the smaller platforms. We've got U.S. and Canadian trade talks have collapsed. It looks like the tariffs are coming back. I think the financial press is making way too much out of this story, but they were talking about it all weekend. There was this trade deadline last week. President Trump delayed it because we were close to finalizing a deal. At the last minute, the deal blew up, and now we're going back to putting tariffs on Chinese goods and on Canadian goods. And the Canadians are going to retaliate with tariffs on our stuff. But when you look at the sectors that we're actually putting tariffs on, I mean, look, no offense to the people who work in these sectors, but who cares? This is such a silly story. Again, there's a lot of really dumb headlines this morning, to be honest with you. Also going on, more signs of food inflation on the horizon. Corn prices have just hit a 3-year high on the combination of the El Nino that's developing in the Pacific, what's going on with the exports in the Black Sea between the Ukrainians and the Russians. But now U.S. yields are expected to turn lower based on results of the crop tour that's going on. So higher food prices on the horizon. And Bulgaria is now the third country to take what it looks like increasingly desperate measures in order to keep one of their nuclear reactors online. We've talked about this in Romania. We've talked about this in Hungary. Now Bulgaria is trying to build a dike and dredge a channel to get more water from the ever-declining Danube River in order to keep that unit online. Power in Europe is not looking so good here. Guys, we got a lot to talk about this morning. Why don't we shrink my big melon of a head? Let's see what's going on in the world. Don't forget that like button and that subscribe button for the algorithm. And come on back tomorrow because we do this every business day. So come have your coffee with the Melon Heads. And right now, well, the S&P 500 is lower by 10 points or 0.13%. A little bit of red this morning. The Dow is off by a similar amount, 66 points, 0.12% in the red. And the NASDAQ is leading the way lower, off by 166 points or 0.57% down for the NASDAQ. We've got the dollars a little bit stronger here, higher by 12 basis points at 98.92 this morning. And looking over at the bond markets, we've got the 30-year yield is a little bit lower here, 5.241%. That's down by another 3.5 points this morning. Again, that is being driven largely by this anonymously sourced article that the Treasury could use the TGA for buybacks. We've got the 10-year yield is at 4.717, off by 2 points and change. The 2-year yield is at 4.246, off by a point and change. And the 1-month Treasury is at 3.709, up by a fraction of a point. We've got Bitcoin is moving higher again this morning. Bitcoin had one hell of a start last week, traded sideways for a few days over the weekend. Now we're grinding higher again, 78,971. That's up by $1,200 this morning. Again, it looks like the debasement trade is hot again this morning after these comments from Treasury. Because looking over at the commodities board, we've got spot gold is higher by $71. $4,675 an ounce for spot gold. That's up by 1.5% this morning. Spot silver is also higher, $69.71. That's higher by 72 cents or 1.06%. Silver pushing $70 once again. I like the shiny. Copper's higher by about 0.7%. Platinum's higher by 0.2%. Palladium is higher by 0.2%. And crude oil is down, $1.44 lower, 85.61 for WTI crude, off by 1.67%. We'll talk about oil in a little bit, but first, let's talk about this one, shall we? Bessent could tap near $1 trillion Treasury General Account to fund bond buybacks, sources said. Emphasis on sources said. This is anonymously sourced. The Treasury could use its near $1 trillion general account to help fund its recently announced plans to increase purchases of government bonds, according to 2 senior Treasury officials. Using the TGA would provide the Treasury with considerable firepower to influence long-term bond yields. The Treasury surprised markets last week with an announcement that it would be doubling the size of buybacks of off-the-run securities on the long end from $2 billion to at least $4 billion. Treasury Secretary Scott Bessent said on CNBC, such operations could be even larger than the new higher minimum. That was a day later. First, they said they're going to double from 2 to 4. When they didn't get the result they were hoping for, a day later, he says they could be even bigger. Now, after the weekend, we're coming out and we're saying maybe we'll use the TGA to do it. However, Treasury made no mention of how it would fund the purchases. Most market participants assumed it would do so by selling short-term Treasury bills. The senior Treasury officials did not rule that out. Bessent, in the CNBC interview, called the operation Treasury Twist, a reference to a government or Federal Reserve operation where long-term treasuries are bought and paid for with short-term issuance. That also implied that short-term bonds would be sold. But since the surprise announcement, bonds have retreated from an initial rally, sending yields higher in part because of skepticism voiced by many Wall Street market analysts about how effective the operation would be and whether the Treasury's resources were too limited. Using the TGA would change that perception. The Treasury General Account is essentially the government's checking account, a rainy day fund of sorts held at the Federal Reserve. It's also funded with existing tax collections, yes, and existing borrowings as well. Bessent has built up the TGA to around $950 billion currently, compared with the stated goal under the Biden administration of around $550 to $600 billion. But running it somewhat lower would not appear to entail any immediate risk. Reducing the Treasury General Account would mean the government would have less cash on hand in the event of a new debt ceiling impasse. But the latest estimates are that a new limit won't be hit until the winter of next year, and perhaps not until the early spring. That would give time to build it back up if needed. Meanwhile, bond yields could be influenced by even a small use of the TGA, or even just the recognition that the Treasury would use it to buy government bonds. So that last sentence is important here. Even a small use of it would affect long-term yields. It would affect it in the short term. The second they stop, the yields are just going to go back up. But mainly here, it's just the fact that they're saying it. The threat of doing this is enough to move those yields lower this morning. And again, the Treasury General Account is pretty big. This is looking at trading economics. There is currently $959.4 billion in the Treasury General Account. That is significantly higher than it has been over the last several years. And you'll notice during the last debt ceiling fight, we went way down to like 49 billion. So Uncle Sam's got plenty of money to play with the treasury market if they want to, but they also have to pay for Social Security and they have to pay for defense and everything else. So it's not like this is $950 billion. That's just going to get dumped into the bond market. Not even close. It's probably going to be single-digit billions. All right. Meanwhile, it's Economic D-Day, or at least that's the title that they're giving to it. The new sanctions, we don't have any details yet about who is going to be sanctioned and if they're actually going to do these secondary sanctions on foreign banks. But we do have this one. Iran's real currency hits new record low as U.S. prepares to announce more sanctions. Iran's currency hit a record low as Washington prepared to announce new sanctions it said would add further pressure on an economy already battered by previous sanctions and a U.S. naval blockade. The rial dropped to 2.02 million to the U.S. dollar as trading opened on currency markets. Iran's official central bank rate stood at 1.5 million rial to the dollar, but the market rate is what most Iranians pay. The currency had already been under pressure before the U.S. and Israel attacked in February as Iran faced double-digit inflation and negative growth, but has repeatedly hit new lows as nearly 6 months of war have taken an even greater toll. Iranians find daily staples increasingly unaffordable since the war began. Rice is up some 60%. Prices of beef are more than 150% higher. The International Monetary Fund forecasts that GDP will contract by more than 5%. Still, economic pressure has not yet translated into political pressure. Iran retains a key strategic advantage. Its attacks and threats on ships in the Strait of Hormuz have brought traffic in the vital waterway to a near halt, damaging the world economy and heaping pressure on President Trump ahead of congressional elections. So we'll probably have more detail about this on the show tomorrow morning. We should hear later today what they're actually going to do, if they're actually going to target Chinese banks. And then, of course, it's all, what do the Chinese have to say about that? I doubt they're just going to take it and do nothing. All right. Meanwhile, Nvidia is buying their own customers. So who are they going to sell to? Same people they've been selling to all along, themselves pretty much. Nvidia to pay Poolside a $6 billion license and tap the startup's staff. In other words, they're buying the company without buying the company. Nvidia has agreed to pay $6 billion to license artificial intelligence models from Poolside and will extend job offers to more than 100 employees, according to people familiar with the situation. Poolside only has 115 employees. They're basically hiring the whole company. The startup also received an additional $1 billion investment from Nvidia at a valuation of $12 billion, not including those funds, said the people who asked not to be identified because the discussions were private. Poolside will keep operating independently, they said. They're going to keep operating independently with single-digit employees. Existing backers will receive a payout from the Nvidia funds, according to the people. So what's going on here? They're hiring the whole company. They're giving them $6 billion to license the IP, $1 billion at a $12 billion in valuation. That's an investment. That's so $7 billion is going to be used to pay the existing shareholders at Poolside. And then Poolside is just going to be a husk of a company. I don't know what they're going to do, but basically Nvidia has just bought the whole company. This is an acqui-hire. And we get some detail in this article in Latent Space. They talk about this letter that Poolside CEO put out shortly after this deal was announced, and we get some clues as to why they're doing this. This is from that CEO letter. He said, at the end of last year, we had a 6-week window in which to raise $2 billion to pay for a 40,000 GB300 cluster. Those are Blackwell GPUs. Coming online in January. We didn't close it in time, and we lost the cluster. We also know that 10,000 to 20,000 GB300s would produce a great model that could rival the current Frontier, but the scale of next year's Frontier models requires far more than an order of magnitude larger cluster. And for this, the constraint today is not only capital, it is physical data center space and contracted compute. All right. So in other words, they tried to raise $2 billion last year and they didn't close it in time. They couldn't raise the money they needed to operate for this year. And they're saying the next iteration is going to need even more compute than that. And the constraint today is not only capital, but physical data center space and compute. In other words, this company could not afford to keep operating. And so NVIDIA is just buying them up. All right. Buying your customers to keep them from going bankrupt. Okay, that's the business model now. Good luck with that. And it's not just Poolside. NVIDIA discusses Perplexity investment at a $30 billion plus valuation. The information reports. This story just broke late last night. NVIDIA is in talks to invest in Perplexity as part of an equity funding round that would value the AI startup at more than $30 billion. The information reported on Sunday, citing people with knowledge of the discussion. The funding round would increase Perplexity's valuation by more than 50% from its previous financing a year ago. Perplexity's annualized revenue has risen to more than $750 million from less than $250 million at the start of the year, the report said. Again, annualized revenue is a completely fabricated, irrelevant statistic. They take the latest month, and when it looks really good, they multiply it by 12, and they publish that. And they say, look at our annual run rate or our annual recurring revenue, whatever the ARR, it stands for a couple different things. It means nothing. All right. After this bubble bursts and everybody gets wiped out and they're doing the postmortem on this bubble, ARR will be one of those things that they mock us for talking about so much because it means nothing. All right. Remaining performance obligations and backlog will be another thing, as if these are future revenues that are guaranteed. It is not. Part of the revenue growth has been driven by Perplexity Computer, a cloud-based AI agent used by professionals to automate computer-based tasks, the report said, citing people familiar with the matter. All right, so NVIDIA is giving a bunch of money to their customers so their customers can give it right back to them. And NVIDIA's customers are notified about AI-related price hikes above 15%. And again, all NVIDIA really needs to do to raise their prices is to notify themselves, tell their customers that their price is going up. See what they did there? Yeah, some of NVIDIA's biggest customers have been told that the price of servers containing its AI chips are going up more than 15%. In many cases, with memory chip costs soaring, the price hikes will go into effect on systems shipped early next year and will impact systems, including those with the flagship Vera Rubin and Grace Blackwell chips, according to people familiar with the process who has not to be identified. The increases will depend on the generation of NVIDIA chips and the memory configurations, they said. So now that Jensen's got $500 billion of private credit money to play with, he's going to go ahead and help himself to a 15% price hike, courtesy of your retirement. It's getting even more expensive to build out these data centers at a time when they're all struggling to come up with the cash. And we've got AI platform Hugging Face exploring sale, report says. More consolidation at the lower end here. Hugging Face is exploring a sale that may value the AI platform at $13 billion or more, Business Insider reported, citing people familiar with the matter. The startup has been working with a bank to gauge bidders' interest, though no deal has been reached yet. And that's interesting. Like, the story's like, oh my God, look how high the valuation is. Hugging Face is exploring a sale. Yeah, they're talking to a bank who is going around and shopping this to bidders, but notice there's nothing in here about anybody actually expressing any interest or actually placing a bid. And if they did, is the valuation anywhere near the $13 billion that's being advertised? This is just a guy standing up on a box in a park saying, hey, guys, I'm for sale. Anybody want to buy me for $13 billion? The company in 2023 said it was valued at $4.5 billion following a $235 million fundraising round that included investors such as Alphabet, Amazon, NVIDIA, Intel, and Salesforce. Hugging Face was recently at the center of a cybersecurity incident. OpenAI disclosed in late July that one of its unreleased models accidentally, wink, wink, hacked the platform to obtain answers to an exam it was given, raising alarms about the safety of AI models. All right, so why is Hugging Face putting themselves up for sale? I wonder. And as all this goes on, remember, guys, they're dumping it in your 401k. Juicy yields draw junk bond tourists to high-grade AI debt. And this is really high-grade in name only. This article is more a condemnation of the rating agencies than anything else. Companies looking to finance data center projects are increasingly turning to junk bond investors to help them raise billions of dollars, even for debt that is investment grade. QTS Realty Trust this week sold $3.9 billion of bonds to fund a facility in Georgia tied to Microsoft. The bonds carried high-grade ratings, but yielded 7.23%, a level higher than even middle-tier junk bonds would often pay. BlackRock is paying a 7.53% yield on blue-chip securities sold in July for a Texas data center project. In both cases, underwriters sold the debt to high-grade as well as high-yield investors, according to people with knowledge of the transactions. The fact that investment-grade rated projects are tapping junk debt investors to get at least some bond deals done underscores the feverish competition for capital as firms pour hundreds of billions of dollars of your money into artificial intelligence infrastructure. Companies have already borrowed more than $410 billion for data centers and other AI investments this year. We're seeing high-yield investors become tourists in investment-grade tech debt, said Steven Schweitzer, a high-yield portfolio manager at Advent Capital Management. When you can buy a fortress balance sheet at a yield and a spread that looks like double B, it's hard not to visit. All right, I have so many issues with this article, so many problems here. First of all, Mr. Swisher talking about when you can buy a fortress balance sheet at a yield and spread that looks like double B, it's hard not to visit. This is not a fortress balance sheet. All right, you'll notice they said, talking about this QTS, that it was a facility that was tied to Microsoft. You'll notice they're not building it for Microsoft. This is a special purpose vehicle that Microsoft set up. They set up a shell company, and all the debt goes in the shell company. So it's not actually Microsoft buying or borrowing the money. That money is not guaranteed by Microsoft. It's guaranteed by this shell company, this special purpose vehicle. That debt is off balance sheet. So is there really a fortress balance sheet associated with this debt, Mr. Schweitzer? Or if it is, why are you trying so hard to hide it off of that fortress balance sheet? In other words, it's not really that safe. Second of all, notice what they're talking about here. This is high grade, right? Investment grade bonds that are yielding 7.25% higher than middle tier junk bonds. BlackRock goes even higher than that at 7.5%. So if this is investment grade debt, why is the interest rate higher than junk debt? Because this debt is junk. It's just that because of this perception of these fortress balance sheets, the investment or the rating agencies are just calling this AAA. They're giving it investment grade ratings. It's not investment grade. It's garbage. It's junk debt, trading in junk debt territory. It's investment grade in name only. But because it's investment grade, they're allowed to sell it to mutual funds and pension funds. But they have to charge an interest rate that's all the way down in junk territory. This is garbage being loaded into our retirement plans. All right, we got another silly trade story this morning. U.S.-Canada trade talks collapse. Carney says retaliatory tariffs will start on September 8th. For some reason, this is like front page news in every media outlet today. I really don't think this story is nearly as big as they're saying because of the categories here. The U.S. imposed 50% tariffs on some Canadian products on Saturday after trade talks between the two countries fell apart on Friday. In response, Canada said it would impose its own retaliatory tariffs beginning on September 8th. Negotiators for both sides had been working on a deal all week, at times signaling that an agreement was near. President Trump had postponed the original deadline of Wednesday, just hours ahead of it being imposed, saying that there was a soon-to-be-finalized deal. Dominic LeBlanc, Canada's trade minister for the U.S., told reporters Thursday that a deal was very close. Again, all these announcements of a deal is close, guys. You got to take them with a slab of salt. However, both sides blame the other for not reaching a deal, as the tariffs impacting roughly $20 billion in Canadian exports, including wine, furniture, dairy products, cement, clothing, fishing rods, hockey equipment, went into effect on Saturday morning. Is this really the biggest news? Tariffs on hockey equipment? Oh, no, not the hockey equipment. Please stop. We yield. We surrender. Tariffs on dairy products. Okay, tariffs on furniture. Canadian wine? Is that fancy stuff that comes in a box? Is that Canadian wine? I don't get it, guys. I mean, most of the trade we do with the Canadians is energy, and that's not being tariffed here. So I don't really see the big deal here. This is political posturing between Carney and Trump. The two hate each other, and so there's people that work in these industries are caught between the two. They were close to a deal. They announced the deal was any day now, and then, shocker, there was no deal. See also the last 6 months of the Strait of Hormuz. Meanwhile, we got more food inflation on the horizon. Corn rockets to 3-year high as traders eye lower U.S. production. This is interesting, guys. This is setting up for a lot of food inflation next year. Prices are up 12% so far this month for corn. U.S. 2026 corn production will fall below government forecasts, advisory service ProFarmer said on Friday after a tour of 7 major production states found subpar crops hurt by adverse summer weather. Looks like we got a lot of tip back on the corn when it gets too hot during pollination. You open up the corn cob, and at the very end of the cob, there's just not very much corn there. It just failed to pollinate. That reduces your yield, and it looks like there was a lot of that this summer. And so U.S. estimates are on their way lower. Elsewhere, crop ratings for French grain maize stabilized after dropping to their lowest level on record during an exceptional hot and dry summer. We'll talk more about that in a second. Data from Farm Office France Agrimer showed. And traders are also weary that El Nino weather event will reduce corn production in Brazil and nervous about Ukraine's ability to export, said Nick Karacher, head of Australian consultancy Latchstock. So we got a confluence of factors driving corn to a 3-year high, more food inflation on the horizon. And they mentioned that drought in Europe. And once again, that is making headlines again this morning. We've got a third country is taking desperate measures to keep their nuclear plants online. Bulgaria to build a dike to steady water flow to the nuclear plant. We've talked about Romania doing this. We've talked about Hungary trying to do this. Now, Bulgaria. Bulgaria plans to build a dike and is looking to redirect water from shore-based reservoirs to ensure a steady supply of cooling water for its nuclear plant on the Danube River. The cabinet has started studies on building the dike as long as 300 meters. It's about 984 feet around the Kozlody station to keep the water level high, with construction taking up to 2 weeks. Energy Minister Iva Petrova told BNT Public TV channel on Monday, "Isn't it amazing here how fast they can get things done when there's an urgent need? Construction could take up to 2 weeks. You can't build a freaking lemonade stand in Europe in less than 2 weeks with all the permitting and paperwork and environmental impact studies they typically require. Now they're putting a dike in a river, and they think they can do it in 2 weeks. It's amazing how motivated people get when they talk about the lights maybe going out. Continuous drought brought the level of Europe's longest waterway after the Volga to the lowest in tracked history last month, including hindering traffic and trade. It also prompted cuts in power to generation at atomic stations in Hungary and Romania, with the latter forced to completely shut down its sole nuclear plant. The situation is extreme, Petrova said, adding that forecasts for later this week are, however, encouraging. They've already, they already cut the output at one of its 2,040 megawatt reactors by about 9% on Friday, the first capacity reduction, due to extreme hydro and meteorological conditions in its 52-year operational history. It's getting harder and harder to keep the lights on in Europe, guys. And with that, I just want to say thank you, everybody, for having your coffee with the Melonheads this morning. Don't forget that like button and that subscribe button for you new guys so we can see you tomorrow. Thank you very much to my magnanimous Melonhead members on Patreon, YouTube, and Buy Me a Coffee for supporting the channel. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.